Howdy. I was on the internet yesterday, where I often find myself, and I saw some people debating something about taxes. A person made the claim that they make 50%, or I'm sorry, pay 50% in income taxes. And I saw the other person claim that that's impossible. It's impossible to pay 50% in income taxes because the top tax bracket is 37%, as you see here. Boom, 37%. The person never made the claim that they pay 50% in taxes to the federal government. They say they pay 50% of their income to taxes. So what does that mean? Well, it means you earn 50% gross. I mean, you earn, I don't know, X amount of dollars gross, and then 50% of that ends up in taxes, and you're left with the net of that amount. That's basically what the person was claiming. Other person was saying very emphatically, very like, I'm definitely right, you're lying about something, something's off. And I just wanted to show you very quickly, like how, first off, this is easily to just look up. I'm using Smart Assets. There's a lot of different ways you can verify this. You can actually just open up TurboTax and just put in some numbers on the software and easily end up with 50% in income taxes if you do it correctly. But this right here is an example of New York. I also did one in California, Los Angeles, California, Los Angeles, if you're of that, if you like to say a little more fancy. That right there is another location where you could easily end up paying 50% in taxes. This is just one example that I found. The max income that you can put into this thing is $10 million. So I just threw in $10 million just to make this a very quick and easy example. Right here, as you can see, this person that I theoretically or hypothetically created, this is a single person, no children, just one single person living in New York, Manhattan, New York, digamos. For example. And then federal income tax right here. The marginal tax rate is 37%. So that person had like half the truth. Like he or she like kind of understood some aspect about the law and was very, very confident that, okay, top tax bracket 37%. So therefore you clearly are not paying 50% income taxes. And that happens to me a lot as a tax professional. You encounter people who have they learn like half truths about things. Like one of the big things nowadays is LLCs. Oh, I have an LLC. That means I can deduct things that could not otherwise deduct. And I'm like, yeah, well, kind of. You can deduct the cost of starting the LLC. But if you didn't set it up to be taxed as a corporation of some sort, then, or you don't have a partner, then you're just going to get taxed regular if you didn't have the LLC at all, because the LLC is considered a disregarded entity for a single member LLC, unless you have an election to have it taxed as some other type of corporation. Anyway, so right here, as you can see, 37%, and that percentage of the effective tax rate on the federal level is getting very close to that 37%. In order to get exactly to that, it would be pretty much impossible, because some of that $10 million or $50 million would be getting taxed at a lower rate on the federal level. But the more money you make, it will get very, 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 very close to that 37% marginal rate as equal to your effective tax rate. I mean, you probably could get to like 36.99999, but you would never quite get to the full 37% unless there's something I'm not considering right now. But you would probably be fine in that regard, but 37% is still a lot, depending on who you ask. Anyway, so then you have FICA right here. FICA is Social Security and Medicare taxes, or if you're self-employed taxes are the equivalent of FICA taxes for employees. With the FICA tax, a lot of people don't realize that your employer is paying half of whatever you pay. So in your little W-2 you see, or maybe your big W-2, I'm not trying to offend anybody here, your W-2, it will show on the box Social Security, Medicare, and it will show that amount that you paid. Your employer paid that same amount as well. If you're self-employed, then you pay the full amount. So you're the employee and the employer, effectively. So FICA right here is 2.44%, but that's just because at a certain point, your Social Security your income is no longer taxed at Social Security, but it continues to being taxed on the Medicare. So that average rate starts to get closer and closer to that Medicare rate. All right. And then another factor that the person did not consider is state taxes. So clearly, if you are also getting taxed on the state level, states can have a add a substantial tax burden to your situation. All right, here's a perfect example of the person paying over 10%, over 12% in income taxes to the state government, right? Now, if you're making $10 million, I'm not saying that's like unfair or anything like that. It's really, I'm not really here to debate what is a fair tax rate or what is not fair. All I'm saying is I saw someone make a claim that it's impossible to pay 50% of taxes. Clearly, as we're seeing here, it's extremely possible. Los Angeles is another example where I could probably make this happen. You could do Oregon and probably get very, very close to 50%. I actually did Oregon, and at least the location within Oregon that I did, it was like 46.5% in taxes. But another factor that we have yet to consider is the fact that theoretically the person just said 50% of their income in taxes. They didn't really specify what type of taxes. So if you include sales tax, and if you're making $10 million, my guess is that your sales tax probably could be higher than that. I mean, if you're making $10 million, you might, after taxes here, you're left with about $5 million-ish dollars. You could easily be spending $1 million in a year. And my guess, if your sales tax, the sales tax in Maryland, I think is like 6%. So you could easily be spending $60,000 in sales tax if you're spending $1 million. But this one right here is assumed that you're spending a lot more in sales tax than $60,000. But if you have a house in New York, chances are you're probably paying more than $2,192 in property taxes. You probably have a really big house. If you're making that type of money, you probably have a house in a nice area. Easily could be add an additional, in this case, they added an additional like 2% or something like that. But it could add an additional 5-6% and easily bump it up to 60%. If you're someone who's making that type of money and you're just like blowing it, like you're making 4.7 or basically $4.8 million a year, and you just spend all of it, you could easily be spending much more than come down here. You could be easily spending more than $147,000 in income taxes. Sales taxes. And then your overall taxes could be more. Fuel tax could be more if you're driving a lot and things of that nature. So easily could be spending more than 50% of your income in taxes, and easily meaning like it's 100% possible, not necessarily that it's easy to make $10 million. I wish it was. I'd be making $10 million. Well, if it was easy to make $10 million, a lot of people would do it, and therefore money would be worth less, because then everyone would just be buying up everything, inflation. All right, I'm rambling. I just want to discuss this a little bit, because it's amazing the type of things you see online where people just like make claims, and you see it in person as well. But like claims that you could very easily, like it's not like a diet plan that like maybe it's good for one person, maybe it's not good for another person, maybe it works for you, maybe it doesn't work for me, etc. It's kind of subjective. But this right here is objective. It's like you could objectively be paying this much. There are probably ways that you would find to try to lower that percentage rate. Like, for example, if you have income coming from real estate, income coming from investments, you would probably having that income getting taxed at a lower rate, if getting taxed at all, depending on how you have it set up and things of that nature. Like real estate, sometimes you could have paper losses. You have a net positive cash flow, but with the depreciation or maybe some other types of costs that is not really a real thing. It's not like a cash cost. I mean, some things do depreciate in value, but real estate, generally speaking, is what is appreciating in value. So you can deduct that. At the same time, well, you can deduct the actual building, but not the land, because land is said to not to depreciate. Although if people want the land less, then it will effectively depreciate as far as market value is concerned. And some more theoretical philosophical way, maybe land never depreciates in value. But yeah. So I think this is a very interesting thing to just look at. And anyway, goodbye.